What's going on, Jeff here? Welcome back to the channel. Yesterday was a wild ride. All right. And as I am watching the price action, I had scalped some moves to the upside, played some downside, scalped a little bit more back into the upside. I said, listen, you know what? I had my three plays, okay, which are a little bit quicker. I really like to stay in a trade a little bit longer, take a little bit farther, dated options expirations, let them play out a little bit. It fits more my style, my trading personality, and so forth. I decided to jump on Twitter, and I want to talk about something very important in this video, and I hope it resonates with some of you. Okay, so first of all, it was wild to see the tweets from individuals. You have people saying, on that first pull down right here, right at the open, oh, your bears got screwed. And then all the way up here, you got people laughing, saying bulls got screwed, only to go back down to 408 and inevitably close higher than they were. And the point of the matter I'm trying to get at is, if you're in this market and you're killing it, then you're probably not watching this video, and kudos to you. But if you are struggling, you need to take a step back and look at things from a bigger picture. Too many people are trying to predict what is going to happen. If you have not read the book Trading in the Zone, it is not cliche. There's a reason why Mark Douglas is a very successful trading coach and talks all about the psychology. And one of the things I learned very early on was his saying that you don't need to know what happens next, right? Professional traders don't need to know what happens next. They play their setups. If it fails, to follow through, then they cut at a certain point and they scale out if it does follow through, and so forth. And you don't need to do that. And too many people are sitting here trying to, at least on Twitter, trying to predict where the top is going to be, if the bottom was already in. And you need to understand what kind of, trader or investor you are. If you are a long-term investor, then yes, those are some things that you do want to think about. Have we reached the top? Is this the bottom? Should I start scaling in on some of these large caps? Should I dollar cost average? Should I cut? Should I swim? Whatever it is. But if you are a trader, inevitably, it doesn't matter where it's going. It doesn't matter if you're a bull, if you're a bear. I don't believe you should be either one. You should look at solely the price action that is in front of you. We are consistently in an uptrend ever since, really going all the way back to October, but really since we broke out of this consolidation at the start of the year. I talked about that 386 level. We broke out of it. We retested. We continued to move up. We even retested it kind of again, 388, and have continued to move to the upside. And so many people are looking, at a larger time frame, saying, listen, we're overbought. It's got to come down. Like, we haven't hit bottom yet. The economy's crap, and so forth. And inevitably, the market makers are just stealing your premiums, and you're slowly bleeding. If you're adding in to some of these positions, you're going even farther negative, and that's inevitably how accounts blow up. Okay, right now we are currently in another consolidation phase, anywhere between that 408. It's right with that 415, 416 area. Okay, we zoom out. We've talked about these levels numerous times. That 408, that 416, which is right here, previous support, resistance. Once again, it kind of broke through, and here we are once again. There is a gap going all the way back until August around that 422 level. However, that 408 level, which once was support, acted as resistance right here, is kind of holding up as new support. Inevitably, the trend has not changed. We are still moving to the upside, even though, and I talk about this, even though stocks like Nvidia and Tesla, yes, they have moved 100%, okay, in a short period of time. Okay, Nvidia a little bit longer than Tesla, but still, inevitably, a mega cap moving in a 100% in a short period of time does not mean it cannot go further. Okay, it's very important to note the potential, all right, and the bigger picture of just where it's at. If you are looking to add a massively long-term position now, let's say on Nvidia or on Tesla, you might want to wait for a little bit of a pullback. Okay, I do eventually believe we will get one, just like we always do. Okay, but the point of the matter is just because it's gone doesn't mean, okay, let me start buying the opposite side now, because it just can't go any higher, right? What is high can go higher. What is low can go lower. We've seen that, numerous times happening. The other thing to point out is I feel that personally, the short side is a favorite when it comes to FinTwit. And what I've realized by journaling and looking back at my trades is, and also I from kind of other, much more experienced traders than myself, guys that play futures and so forth, is I do so much better playing the long side than I do the short side, I'm sorry, the long trend, okay, than I do playing the short trend. And the reason being for that is because if you take a look at this yearly chart, and I have a feeling a lot of people, will, probably agree with me on this if you really take a deeper look. And that doesn't mean playing puts for calls. I'm talking about the legs of this, okay? The reason being why I do better on the long side, on the long trends of this, is because the long trends are a little bit slower. Okay, it's elevator down, stair step up. You look at where we were, in June, we were sitting around this 415. We went all the way down to 365 in literally the matter of, I don't know, 6 or 7 days, consolidated a little bit. Once we broke out of this level right here at that 391, 392, retested, and then it was a good amount of time just slowly grinding and grinding and grinding, where inevitably every dip got bought. Okay. And we've seen that again once we hit 350. It was the same thing, slow grind, a little bit of choppiness here. Obviously, we had some, wild CPIs. And then once again, here we are at the start of the year, that slow grind up. Now, like I said just a few moments ago, that doesn't mean that we cannot be profitable playing puts than playing calls. I personally feel because IV spikes a little bit higher, okay, especially on the contracts that I play, IV spikes a little bit higher, and therefore I feel like my puts will pay a little bit better. But I'm talking about the larger picture, and I'm much more profitable playing these longer trends from back, the start of the year to where we are now in February, versus trying to ride, this insanely quick roller coaster all the way up here at 410 down to, 375 in the matter of 4 or 5 days. Okay. It's a much more comfortable ride for me. It's a little bit longer. I have the different mindset and so forth. So while you do read and you do see people all over trying to, predict what is going to happen, say, listen, it has to go down because it's just overbought, and this hasn't changed. And Jerome Powell was, he really wasn't dovish, and he did say numerous times he's going to continue raising rates. It's important to know, where the trend is going. And as of right now, we are still in buy the dip mode. Now, will that change? Well, eventually it will. I mean, nothing lasts forever. We got to break through this 408 first. We've got 404 and 400 and 398. We have a lot of support beneath us before we really start flipping, flipping those EMAs and starting to ride that wave down. And like I said, a lot of times by the time you get that confirmation, because it's an elevator down, it happens so fast that you can let that ride out and you have plenty of time to be able to ride to the long side. So guys, just keep that in mind. I want to talk about this. I hope that video helps. If you need a little better understanding, drop a comment down below, rewatch this video. But I see all this happening, and being written all over FinTwit, and it kind of just makes me laugh for a second, because it's like, you don't need to know which way it's going to go. It doesn't matter what Jerome Powell said. If you're looking at the price action and that's the kind of trader that you are, that should be on the forefront. So like I said, guys, that's it for this one. I'll see you in the next one.